Investors have a lot to digest this morning. Canada's November GDP, a slew of earnings, and U.S. President Donald Trump has chosen a new Fed chair, Kevin Warsh. Let's get some perspective on all of that. Andrew Pyle is Senior Investment Advisor and Senior Portfolio Manager at CIBC Wood Gundy. Andrew, it's good to have you. Thanks for joining us.
Pleasure. Thanks for having me on.
A lot to talk about. We're going to start with Canada's GDP numbers for the month of November, basically unchanged. What are your thoughts on that, and how might that kind of weigh in on the markets today, do you think?
Well, it's really not going to have too much of an impact. I think economists were expecting a light month. The Stats Canada is indicating perhaps a 0.1% increase in GDP in December, although that is a very early estimate of how things were last month. It does raise the suggestion of a contraction in real GDP for fourth quarter. And as we know, technical definition of a recession is 2 consecutive negative quarters. Again, premature to see how Q1 is going to pan out. Again, not much of a surprise here because we knew the auto sector was hit. We saw production there down 6.4%. That was obviously the drag on manufacturing. Without services, the number would have been quite a bit worse.
Okay, so let's move on then, just because those numbers were relatively unchanged. Another big piece of news coming out today is U.S. President Donald Trump, of course, saying that he would choose Kevin Warsh as the new Fed chair. Of course, this has to be approved. But first of all, Kevin Warsh, he does have a history of being, within the bank's board of governors. What do you make of him and this choice by Donald Trump?
Well, it's an interesting choice because while Warsh is obviously a key supporter of Trump and has been for a number of years, Warsh is also defined as a hawk amongst Fed officials. Case in point, he has been very hard on inflation going back. At one point during the financial crisis, had made an argument for raising interest rates and not cutting interest rates. And of course, Trump, as we know, wants interest rates down to 2% or lower. So that's interesting. Warsh is also known for his views on the Fed's balance sheet and very much wants to see the Fed bring that balance sheet down. What that would entail would obviously be upward pressure on long-term bond yields. And you're seeing that this morning in global bond markets, because as we whittle down the Fed's balance sheet, that means obviously we're releasing supply into the market, and that will tend to put upward pressure on yields. So it's an interesting choice if you're talking about affordability on mortgage rates or just interest rates in general.
Do you think he's maybe, out of some of the other picks that we thought Donald Trump might go with, is he maybe a less controversial pick?
I would say so. I mean, he's got credibility with the Fed. He's got credibility in the markets. He's got experience on the Fed as a past Fed governor. So the markets are going to be comfortable with that. And I think markets are also going to be comfortable in the fact that if you're picking someone that has had a hawkish leaning at a time when the Fox News headlines has been for lower rates, that might suggest that fears over Fed independence might diminish somewhat as well. And again, this is early days. But it's an interesting pick. We are seeing it reflected in the yield curve. The U.S. yield curve is steepening. Obviously, rate cuts at the front end, reduction in the Fed's balance sheet, obviously being an upward influence on longer-term bond yields. So we'll have to see how this shakes out. Of course, to get him in, as one senator has put it, we need to see the issue with Jerome Powell resolved before any candidates will be advanced.
Mm-hmm. Okay, so we'll watch on that front and see what happens there. A lot of earnings coming out this week, and I want to turn to some of the earnings we're seeing today, including the Canadian National Railway beating on profit and revenue. What do you think of the company? Do you think that's a buy after what we're seeing today?
I think these are great results. I think I would argue that the results are probably better than what many would have expected, especially given the activity on the economic front in the fourth quarter. Clearly, CN has done a great job, mainly on the efficiency ratio. I mean, the company's done a really good job in that regard. But we've seen revenue up, we've seen shipments up, and this has been one of our themes for the last several months: is these plays in Canada on transportation and storage, CN being one of them, as we start to see more cross-provincial border trade, and I think that will continue in 2026.
Chevron also beat as well. What do you make of some of these energy companies right now, particularly everything we've seen since the start of 2026, which really wasn't that long ago?
Well, it's interesting because Chevron coming into these results really was not favored over the likes of, say, Exxon, which is seen as stable, solid balance sheet. Chevron, there's been a lot of question marks. Having said all that, the company did come out, obviously, with a profit decline. But that decline was a lot less than what analysts had expected. So I think you're going to see some upward moves in the stock today. Venezuela is critical with Chevron. Chevron does stand to benefit, provided we can get a stable situation in Venezuela, get operations back online. Some analysts will see Chevron perhaps as the underdog for 2026.
We're also watching the Canadian dollar today. It was down last time I checked. I'm not sure whether that's the GDP numbers coming out this morning, bringing it down slightly. Yeah, still down. What do you make of the U.S. dollar? Obviously under a lot of pressure right now. Is that good for the loonie, do you think?
Well, anything that causes the U.S. dollar to lose favor, and again, we've got Trump back again, supporting the dollar debasement view in the market that we've seen in the last week to two. The Canadian dollar is clearly benefiting from that, as we were seeing the euro and even the yen this week. So I think that's a trend that's going to continue, considering that we still have significant uncertainty with respect to U.S. policy. We'd argue maybe on that point that, with this appointment for the new Fed chair, that could give the U.S. dollar a bit of a lift as the markets view him probably as more credible, more hawkish than other candidates. So you could see the U.S. dollar pick up some strength, coupled with the fact that GDP really wasn't a great print for Canada. That could weigh on the Canadian dollar short term. But we still are strongly in the camp that the U.S. dollar still has some major headwinds to go through as we proceed through 2026.
Just lastly, there's so much to wade through right now. And as you say, a lot of uncertainty still. I think it's pretty safe to say we're going to see some uncertainty for a while. There's geopolitical risks that we haven't seen in some time. How do investors try to wade through this? Where do you think is the right place for investors to go or to look to?
Well, I think investors have to stay invested. We've been arguing this point for a while now. Coming out of the market on headlines really doesn't make any sense. Having said all that, you still have to have some defense in your portfolio. So we're looking more at things like utilities, things that would stand up if we were to see a hit. As we talked about a couple of weeks back, the stage is set, I think, for 2026 to be a more volatile year, and B, to be a year where we probably will see one or two significant pullbacks in the general markets. And I think your portfolio has to be prepared for that. But having said all that, the setting changes weekly. Today, the announcement on the Fed chair, I think, is reasonably market positive. But going into next month, we don't know what to expect.
That is for sure. Okay, that's all the time we have. Andrew Pyle, Senior Investment Advisor and Senior Portfolio Manager at CIBC Wood Gundy. Appreciate your time. Thanks so much.